So last week I was looking at the equilibrium. Hold on a minute. Have a look at this properly. Where does this come from? Let's have a look at the weekly. There we go. There we go. So this gap here, right? I was looking out for the midpoint of this gap, which is the consequent encroachment. That consequent encroachment is settled at 43198, so 2,431.98 cents. Obviously, what I am having a look at this point in time is the IDC charts, right? This is the IDC exchange. So if you're having a look at this from a different exchange, this number might differ very slightly. It might be 50, it might be, I don't know, I'll be honest, I don't know, but this number will differ because this wick might not be as high as this exchange's wick, right? For those who trade, you guys will know exactly what I'm talking about. But if you also have a look at the weekly time frame, we can see we've been bullish for 4 consecutive weeks. Stops has not been taken beforehand, right? We did trade into the upper quartile of the fair value gap. So this is the halfway point. This is the quarter range. So quarter, half, 3/4, whole. We traded into the quartile range, the upper quartile, before rallying to the upside. Now we are currently trading above all candle body closures, which gives me the confidence. Let me turn this down a bit because I think this is a bit too loud. Yeah, so 2,431.98 would be my next point of interest, as we've already closed above all of the other candle body closures. I mean, this week's candle body is already doing a lot of damage. So what we've seen is Friday retracement into this gap, and then obviously today we had minor retracement, 50% off the wick, the gap of the previous day's candle, which was last Friday. And then we're having a look at 2,431.98. All-time highs, it's like at 2,450.38. As I mentioned before, actually no, it's 2,450.10. I didn't really place it accurately, did I? But as I said before, depending on what charts you're using, this will change. This will vary, right? If I was having a look at the COMEX futures gold market, so it's GC1 exclamation mark, then everybody will be seeing the same price. But I'm looking at it from a CFD perspective. So what has happened already today, we've got buy stops pending. My first point of interest would be 42455, which is about to be met soon in a couple of seconds by the looks of it. And then 431.98 would be my second point of interest, and 450.10 cents would be my last area of interest for the week, and that would be at all-time highs. If you have a look at the hourly time frame, this is the weekly dealing range for last week, so you can see exactly what has happened last week. We had a sell-off, bearish order block, right? The lows of the week, consequent encroachment off the gap, right? We got that right there. That would have been a buy. Stop below there, take profit at this region above these highs, right? Simple, nice and simple, right? And that would have led us into the Thursday. So if you were to have a look at where we opened, right, for the week, we opened, was trading in a discount for the majority of the week, really, before taking off. And we took off right there. That was the shift in market structure. Once we got that, we created a highs for last week. We had a minor retracement, which we traced back down into previous buy side liquidity I wouldn't say to the tick, but once we tickled that area, right, it's very sensitive, and we reacted with another hourly candle, which had minor manipulation to the downside, but closed, or should I say spiked above the previous hour's candle. This would be deemed as an order block, in which was respected today. London session came in 2 o'clock, 345. We came and we broke. We actually had a retest there, so that this would be a brilliant buying opportunity right there, Stop below, or stop maybe at the mean threshold of the order block. Take profit there and take profit there. So my next point of interest is 42455 and 43178. Those will be areas of interest I'll be looking out for. And I would even say for the rest of the week, because this is more for scalpers range, but just wait and see how this pans out. I do have a lot of confidence that buy stops is next on the card, so I will be long on gold, and we'll see how that goes from there.